Good morning, ladies and gents. How are we all doing? I hope we are all good. All right, so we had a good trade playing out today this morning on German 40. So I'm just going to do a quick recap of this particular trade. And after you watch this, if you want to see the running trade, you can just check on the shorts video. I'll drop the link in the description. Just view that shorts video, you see the actual trade when we shared it and when it was running. So what were we looking at today? Past couple of days have been bullish on German 40. As you can see, we've been strong bullish for the past couple of days. This is a reminder for you guys to read the Candlestick Trading Bible. This right here is a reminder for you to read the Candlestick Trading Bible. If you haven't read it, if you want to go through it, I'll also put a video in the description of the videos which we did when we were going through the book. So daily, the bias is bullish. Nothing much to explain here. Going to the 4 hour. So basically, I think price is actually setting all-time highs. We've been setting all-time highs on German 40. So there's nothing to reach for to the left. Price is just setting all-time highs. So coming down to, let's just remove this. Coming down to the H4, checking bias as well. You can see here we also bullish. After price gave this week, you remember the week we spoke about yesterday on the daily. This was the price action. Let me see, was it this one or it was this one? Let's just quickly cross check. The Okay, Wednesday. Okay, yes, this was the week we had on Monday, the Monday daily candle. This was the week we had. So from that week, you can see price has just been expanding to the top side. So for those who like swing trading, if you look too close here, you can actually come out with a pattern. So just know that all this price action below this black line right here, this was the week on the daily charts. If we jump back to the daily so that you guys can just see it, this week you see here, this big wick, that's the price action which you see there on the 4 hour. So jumping down to the H1, the only thing you look for is to check if your price is in line with your daily bias. So basically your price is to be trading above the 13 EMA and it has to be at least close to the 13 EMA. That's where you actually get your setup. So if you notice coming into 10, price was actually retracing back. So from 8 a.m. GMT plus 2, price started retracing back to the 13 and we found our support just as the London session opened. All right, so 10 a.m. This is when the London session opened. So when we opened, I was watching price. We were on the 13 EMA on each one, and I was just looking at these candles. I had nothing for the first hour. So for the first four M15 candles, I had nothing. I was just watching price. Then when we got this stop, if you see this week right here, it took out some equal lows here on the 3 minute time frame, which is my time frame of entry. So just to show you those weeks before we come down, sorry, before we come back to the M15, these were the equal lows I had, and my London open candle was this one right here. So you can see I just marked it with a faint gray color there. So I was just watching price to see what they actually want to do. So these equal lows, this low just before London opened and these lows here just after London opened, they were taken out by this push down. This is the candlestick on the M15. So that's the week again. So from there, after I saw that liquidity has been taken, the only thing now I was looking for is for price to come back above the 13 or at least give me a reason to buy. So if you're going up, you want to buy when price retraces back into an OB, into a level, or into a moving average. So same concept if you've been following our videos. So we had this order block here. This was my first breaker. As soon as we broke that order block there, we had this candle here. I'm not sure if you guys can see it. This particular candle here, this pin bar. That was my entry trigger for this candle. So if you come back to so my entry was here. Stop loss, if you come back to M15, that's where I want to explain how I came up with my stop loss. So on M15, I figured that on M3 I already have a pin bar, so I'm already bullish. So instead of having my stop loss coming all the way below the last low, I just put it below this candlestick body here. That's where it started. Then I started trailing it as the price was moving until I trade until the top. I'm just going to show you just now. So that was my setup right there. So let's see if I can bring this back. Okay, seems like I can't. Let's see. Okay, I'm a bit stuck there. But anyways, let me grab the tool again. Right. So my setup was basically looking something like this. I don't know why this thing keeps going all the way up. All right, so on M15, the setup was looking something like this. Uh, that blue line you see at the top there, I don't know why this color became blue, but that blue line, that's the 100 points. From my entry to that blue line, that's where the 100 points is. So there's not much volume today because on days when you have volume, price will simply push all the way to 100 points within that first push within your setup. So today my setup was 1:3, so it was somewhere. I think it was somewhere here because this TP hit just now. So initially it was looking something like this. But if you watch the shorts video, you see how it was looking like. But anyways, this is the basics. So it was looking something like this. Okay, 1, 2, 3. Right, something like this. Yeah. So as the price started to push, then I was moving my stop loss. So again, they gave another entry right here. So we got another pin bar, we got another pin bar. So if you didn't enter here, if you were waiting for maybe for price to go sideways and interact with the 13, you could have still entered on these two pin bars here, or you could have waited for price to actually break yesterday's high and come back retest with the same pin bars. So there were a lot of confluences on this particular setup. So no matter where you entered, even if you had entered somewhere here, then your stop loss was going to come just below these two candles, and your 1, 2, 3 was actually going to be somewhere in there. So no matter where you entered, if you were following price and understanding where price is going, this setup was going to be very easy for you to actually get in. So that's it for today. Nothing much to talk about here, just one good winning trade. Same setup as yesterday. Yesterday we had the same pattern. Same pattern after London session open. We had again a liquidity sweep on some lows to the left. So if you notice here, 10 a.m. was somewhere here. This was my 10 a.m. and you can see I had marked that range. So price actually started by selling. I'm not sure if I got into the sell because I think I was no, I didn't get into the sell. I was actually just watching price to see if they were going to continue pushing down. So we ended up breaking this low and this low, taking out liquidity. And again, we had the breaker. So break off the order block, you can still enter there, where you can wait for price to actually retrace back into the 13. Again, we had another order block there. We had an inverted hammer, and we had a bullish engulfing straight after that. followed by a W pattern. So we had an inverted hammer, a bullish engulfing, then price came back to the same level, meaning that if you had entered this and waited for this close, so let's say you had bought here, your stop loss was supposed to at least be outside these candles or maybe below, because here we had an M15 fair value gap. So your stop loss was initially supposed to start outside the range here. W pattern, another breaker, another entry, a price trading above the previous day's high as well. That's when you move your stop loss from here, you move it to here. As your price starts to move, you trail or you just wait for halfway, collapse your trade or scale out or scale in if you actually feel like price will continue pushing up. So yesterday we had the same pattern. So Ger40 has been trending, and I will say again, trending markets are always the best markets to trade on. Trading markets are always the best markets. So if you catch a trend on the daily, it becomes easier to look for setups in the mornings or in the afternoon, whatever time you trade, it will become easier because you know where your price is going. The only thing you need to wait for is either a stop hunt or a liquidity sweep or whatever you call it. Then wait for a confirmation in your direction, execute, calculate your risk, execute, manage your trade, trail, break even, TPE, scaling, and all that. So I hope these videos are helping. If you've watched until the end, thank you so much. I'm going to drop the link to the actual trade as it was running. I'll drop it in the description. It was posted on the shorts videos earlier. So thank you so much for joining. I hope your week is going well. Enjoy the rest of your day. Good trading.